All right. Have a good night. And welcome back to another weekly update on the portfolio. So, truth be told, this has been a pretty crazy week, and I actually wasn't planning to make a video just because I was tired and demotivated, but I thought it's almost 10 o'clock at night. Might as well just suck it up and show what everybody I'm up to in terms of my portfolio. So a lot of exciting things, and there's a bit of up and down. So for those of you who don't know, the market was really on an up in the first half of last week, and then there was a huge drop. So let me just tell you about what's happening with the portfolio since then. So since the last update, my portfolio was at about $149,000. I made a big gain on Tesla. I had bought about $35,000, actually $38,000 worth of Tesla ETF. And after Tesla earnings, I was fortunate that earnings went my way, and Tesla shot all the way up to about $268, close to $270. So I was selling as it was going progressively up, and happy to report that I made about 4,000 to $4,500 profit and about 6,000, 7,000 gain just because I was actually down before I actually realized the gain on the very next day. So lots have happened with my portfolio since then. I'm just show you where I'm at. My cash position is actually a lot lower. I've actually transferred a lot of funds from my cash account over to my non-registered. So I'll show you what kind of purchases I made. So first, starting with my cash position, it's at $12,882. Going into my TFSA, a lot of changes. Starting with the things that haven't changed. ENCL is still there at 710 shares, and oil has been going down quite a bit this past week, and it's down from all the way from about, let's look at the weekly, all the way from the 20s now down to 1931. But fortunately, I did get in at a pretty good price, and I'm still up about $56, 64 cents, so about half a percentage. Um, my HPYT is currently now my biggest holding, so it's worth the biggest percentage of my TFSA right now at 5,200 shares, and this is worth about a book value about 56, $57,000. Currently, I'm down about 5%, which equates to about $3,264, but that's fine. Basically, I'm getting a pretty good dividend from this one every month. Um, well, the other positions that's still been the same in this account, my USCL, which is tracking the S&P. I'm at about 600 shares and I'm up about 3%, which is $403. Everything's looking great there. I love USCL. Just keeps going up as the US market goes up. So, and I'm very bullish when it comes to the S&P 500. The next one that has already been in my portfolio in my previous videos. Next one is UTES, which tracks utilities. This one was doing pretty well. I was up earlier this week when utilities was up in the tens, but now it's down to 982 just because we've had a rough week in the second half. So I'm currently at 1,100 shares with total return of negative 2%, which is about $218. And lastly, my Tesla. So originally I was at $38,000, but now I've trimmed it down to just about $5,000 worth of Tesla. But because I did get in a pretty good price, I'm still up about 6.5%. Tesla has been down since its highs this week, but I want to hold because I'm still bullish on Tesla. I do think that once this pullback happens, it's going to shoot back up to new highs in the coming months, especially after the election. So I'm excited about that. Some new holdings, QQCL. I am adding the other market index, QQQ, in comparison to SPY, is a lot more tech focused. So I'm currently dipping my toes into this one. Not a big position, 380 shares, down about almost 1%. Not a big deal. Again, this is another position that I was up earlier this week, but now it's just down just because, that's the market. I started a new position in RS because it did have recently a reverse split. So for those of you who don't know, usually after a reverse split, the price of the shares do go down. So what we see here, um, was that RS was probably around the 13s. And then here on October 23rd to October 24th, we saw a split share, which saw RS drop from 13s down to the 12s. So I did start accumulating a little bit over here. And if it does go lower, I might get a little bit more just because it is at a bit of a discount. Um, Currently, I'm down 5.74%, but that's totally fine. This RS fund does help my TFSA diversify a little bit, getting a little bit of real estate, which I really currently didn't have in my TFSA. So this is a new position. Also, I added a recent new position in MSFY, which is Purposes ETF that tracks Microsoft. Not gonna lie, I did pick this up at a bit of a high this week, just before earnings. I knew that Microsoft was gonna beat its earnings this time around for quarter three, so I picked up a bit of a position. I mean, obviously, that greed in my heart was hoping that after the earnings report, it would go up a little bit. But it didn't, but not a big deal. It wasn't a big position. I just bought about $10,000 worth. I'm quite bullish about Microsoft. To me, Microsoft is one of those stocks that you hold for life. So getting in at a little bit of a higher price does hurt a bit, but no big deal because over time it's just gonna slowly grow. The price is going to go up, and this investment is going to work out. Obviously, as my dividends come in, this might be a position that I want to stack up a little bit on because Microsoft has kind of dipped to what I would say is a pretty fair valuation. So I'm interested in picking up more. So Microsoft MSFY, I'm picking this up because it's great for growth and it's also terms of a bit of a dividend, which is not bad as well. Moving into the non-registered, this is where I've dumped quite a bit of money into recently. So I started before Tesla earnings with also a small position of YTSL here as well, which I bought at its lows right before the report earnings. So that made a huge capital gain just within a day. So it made about four or five, actually, no, sorry, it made about $500, $600 gains. So I automatically decided to treat myself to converting some of my Canadian dollars into US dollars. I normally don't do that on Wealthsimple because it's actually quite expensive to convert Canadian dollars to US dollars on Wealthsimple. But because, I didn't expect Tesla to just, hit earnings out of the park and have a home run that I just treated myself a little bit because I thought about it and ultimately it did save me a trip to the local foreign exchange, which to me is kind of across town and uh, usually there's a lot of traffic. So, the time that is saved and also gas prices for me to have to drive there and back, I thought in the end, it's a bit of a premium, whatever, I can take it. With the additional US dollars that I got, as well as another 2000, wait, I actually added some additional US funds just yesterday on Friday, about $3,800 worth. Also, I did transfer quite a bit from my um, cash account into this one just because I wanted to buy more stuff up. Let me show you where they kind of went. So firstly, I bought more. I started a position in Coca-Cola. I think Coca-Cola, after its earnings report, it was overall a good one, but I think guidance is a bit rough, meaning that they do see a bit of volatility in the near future. But Coca-Cola is one of those stocks that is, an all-rounder. It's Coca-Cola is never really going to go away. Its marketing is just insane. In my life, I've rarely found another company that does marketing as well as Coca-Cola. So I just think that it's going to be okay over this, short term of volatility, and it's going to stay with roughly the same. That's why I picked up Coca-Cola, as well as it does have a bit of a dividend, which is always attractive. So I bought about 17 shares, which is about $1,100 worth. It's currently down a little bit, but no sweats. I've been accumulating share by share as it's kind of gone down every morning. So right now only down 2.73%. Not too bad. Um, Next one. So Palantir. Again, you have definitely seen from my previous videos that I had a decent position in Palantir and I love the stock, but we are heading into Palantir earnings next week. I believe it's on November 4th. So I did trim it down. I believe Palantir, although it's a great company, it might be a bit overpriced. And why we saw a lot of tech companies, despite having good earnings, but still dropping in share price, is that a lot of its growth has already been priced in. So I'm fearing, with the fear that Palantir is in the same boat, I did trim my Palantir position down to just 30 shares and about $1,200. And I am looking to buy additional Palantir shares if it does goes down because I think there is a fair chance next week that Palantir could dip below my average price, probably low to mid 30s. So if that happens, I'll just be buying more because I've reduced my price and sold at a higher price. But if it doesn't happen and Palantir keeps going up, then I still have my current position in Palantir at fairly decent average at $40. Moving on to Tree, and this is my next big focus that I want to talk about. I am very bullish on Tree, and this week Tree had its earnings reports, and um, definitely I expected that the earnings report was going to go well, and it definitely did. Not only did its earnings report, not only did it beat EPS and also its revenue estimated revenue, but also it had strong guidance, definitely stronger guidance than we saw with those big tech companies that just dropped since their earnings report. However, for some weird reason, LendingTree has dropped all the way from its highs about $60 to now currently at $45. So that is very unexpected. I believe, from my opinion, I think there is a bit of, market maker manipulation here. But I don't think anything actually changed with the fundamentals of the company. It actually is raising its guidance moving into the next few quarters. So fundamentally, it's either stayed the same or improved. There's no way that there is this overreaction of having a 21% drop in share price. So seeing that, that was the reason why I went across town yesterday and converted another $3,800 of Canadian dollars to US dollars because I really wanted to buy into this dip of LendingTree. So I'm setting $1,800 aside for Palantir, but also I put $2,000 into LendingTree. So I had an average of about I think $58, and then I dollar cost average to LendingTree a little bit before that drop on Friday. And I was at 56, but with the new $2,000 investment into LendingTree just yesterday, buying in at about, I believe, at $45, I'm now down to an average of $52. So I think if next week LendingTree does start to recover, I think I might even be able to break even next week. No problem. I believe that over time in the next 3 quarters, and I'm very bullish about the next 3 quarters because historically, November, December, January the US market does very well, that we could see new highs with LendingTree. So 62 being its recent all-time high, I can see this going even higher. So I'm totally okay with buying into LendingTree. I also did trim a bit of LendingTree just because I kind of foresaw that, with the stock market, anything can happen. So I did trim a bit of LendingTree, selling at about $62, $64, I think, right before earnings report, like literally 10, 15 minutes when LendingTree was at its all-time highs. After that, I also want to talk about two new positions that I've started and I'm excited about. First is Visa. Um, the reason I'm picking up Visa is because I'm stout now starting to look into starting positions and long-term positions. So in the last few weeks, last two updates that I did, you could see that I was more interested in, small cap companies. That's only because my portfolio is small, small account. But if I had, let's say, like $5 million in my non-registered account to invest in US stocks, I'd actually be putting my money into some really good quality companies. So now that I've moved from the thousands into the ten of thousands into my account, currently I'm at 32,000, 33,000 with my non-registered account. I'm starting to buy just small little nibble positions into the stocks that I really want. So the first one is Visa. I love Visa. I think it's a market leader in the financials. Um, so when Visa dipped after its earnings, I did start to pick up and accumulate a few shares. So I'm at about an average of 287, and I'm at about 5 shares, $1,400. And as I do see my non-registered account grow in the coming months or whatnot, I might be I will be planning to build this position even more. So far it's already up $18, which is cool, but again, not planning to sell for a swing. This is actually a long-term play for me. The next one is Google. Although Google did really well with its sales report recently, and we saw that huge increase in price, I still think that Google, in comparison to the other Magnificent Seven tech companies, is underpriced. So this is why I bought into Google because I actually see this as slightly undervalued, and that's why I'm buying into it. I think Google is actually over a $200 uh, a share company, but because of its recent investigation of the DOJ, that I think it is a slightly underpriced. So that I did start a position in Google. Currently, I have about $1,200 into it, 7 shares. It is down a little bit because the last 2 days we did see Google drop since its earnings up to down from about 182, 180, and I've just kind of been picking up shares as it goes down. But yeah, like very excited about this position because it's another one that I want to hold long term. Lastly, just because um, I did want to kind of not make my non-registered too risky. I did add some QQQ because I do see in the next 3 months, as the election is about to end after, mid to late November, that I do see the stock market going up. And with QQQ in comparison to SPY, I just like tech a little more. So that's why I chose to buy this. This is down by quite a bit. My average is not the best at $73.71, and currently the QQQ is at $70. But I believe by year end it will this TQQQ that I'm buying right now will be up to about 77, $78. So at that point, I might look to reinvest this into one of those other long-term holdings that I'm currently building. Lastly, with the remaining Canadian dollars that I've kind of siphoned into this account, I've built out new positions. So first one, again, Microsoft, just like in my TFSA. I'm building in a position in this one, and currently I have about $6,000 in Microsoft in my non-registered. Next, I also have NVIDIA. This is another sorry, not purpose, harvest ETF, which tracks NVIDIA. And as NVIDIA was kind of on a bit of a decline this week, I decided to pick up some of this. Currently, I have about 806 shares and about $10,000, and not down too much, just 1%. So if NVIDIA also recovers in the near future, I might be looking at either swinging this and investing in something else, or maybe just keeping it for the for the dividend. I haven't really made up my mind about that, but this is a bit of a wait and see. And lastly, I also did add a bit of more additional ENC on this one just so I can build up a little bit of dividends in my non-registered account. So yeah, those are the changes for my accounts. So in summary, I was at about 148, 149,000 in my last update a week ago. I made a huge gain on Tesla, and earlier this week, before I added some additional funds into my Wealthsimple account, I was up to about 156,000. But with the recent market drop, I actually dropped down to about 153,000, 152,000 before I started adding some additional funds into my account. So I'm at 159,000, not because I made that much money, like $10,000 in terms of pure gains in my stocks this last week, but because I'm putting money into it. But actually, I am actually still overall up from the last portfolio because of that Tesla gain. Only about 2,000 because my gain has been cut quite a bit by the volatility and the drop in the stock market. But I do believe that I've bought into some great positions going into the elections and the end of year. And when the market does go up in the next 2, 3 months, that I'm just going to be able to harness in a lot more growth in the next 2, 3 months. So I'm excited about that. My current goal is to probably get to 200,000 by next spring. We'll see if that's possible because obviously it's quite ambitious, but I still think if I make some good decisions from here on out and there's not any big losses, that it is possible. So yeah, this is my most recent update. Stay tuned for my next portfolio unveil in the next couple weeks. We'll see what exciting things happen between now and then.